Well, Laszlo Birinyi was one of the first investors to recommend stocks when the bull market began in March 2009. Now, he's saying hold on to those stocks in this very volatile market. Laszlo joins us live from Westport, Connecticut, from his offices this morning. Laszlo, welcome to InBusiness. It's great to talk to you today. This could be a decisive weekend for Europe. We just came off of a not great, but okay jobs number, better than expected. How are you preparing your portfolio?
Well, we're not making any changes. I think the difficulty when you sell is then you have to get back in at some point. And it's very hard to make two corrected decisions. So we think we've done a pretty good job of building a portfolio, and we're comfortable with 95% of our names.
You said that this is a bull market, but it's anything but an average bull market. A number of people say, shorter-term traders, the technical indicators are kind of broken. It's hard to model what's happening right now. What is it that you're seeing?
Well, first of all, I would suggest that the technical indicators have been generally useless through this entire experience. You may recall that at the very top last April of 2010, there's a front page, or almost a front page story suggesting all the technicians were positive, and then June 30th at the bottom, they were all concerned. So I'm not real fond of that approach. What we're suggesting is you've had a 10% correction. It's been painful for the last couple of weeks, but the corrections do happen. And the things that we like continue to look well. I mean, the stocks are coming through with good earnings. Yes, there's some emotion in the market, but historically, I've found that markets which react to news are not as painful as those that discount news. And I think since we understand what the problem is, it's easier to deal with it, as opposed to, for example, the crash, which we never did understand what happened, and even the financial meltdown of a couple of years ago. The financial meltdown, we're not really sure whether it was A, B, C, or D that caused it. I think we know what the problem is today.
What is that problem? And do you think that, you said it's been a painful past few days, are we at that point of capitulation? I mean, I'm looking at a market that's still kind of looking for direction.
Yeah, that's to be expected. I think that, I sometimes liken this to going skiing. You take a very bad fall, and if you're an experienced skier, you realize that the first thing you want to do is maybe go down one of the blue slopes just to get your confidence back. So I think you're going to look for a couple of 4 days, maybe a week of backing and filling and the volatility. But at some point, reality in terms of earnings should set back in and realize that these companies are still in business.
Yeah, it seems like it's a very different picture being painted for us by corporate America, coming off of great profits in this past quarter, but then the macro environment seems to be capping any gains there. Then I was looking at your most recent letter. The one sector that you do want to steer very clear of are financial institutions, the traditional banks. Why is that? What is it that you see there as a real weakness?
Well, historically, banks make all their money early in the bull market. In fact, over the last 6 bull markets, 40% of the gains that banks make in the bull market, they make in the first 2 months. So with only one exception, I think it was 1990, banks are basically underperformers during bull markets. And that history has been a really good, useful tool and guide in this experience, and so we're going to go along with it.
So history has been a guide in that experience. You say analyze the environment, though, not the event itself. What is the environment right now?
Well, I think you're in a bull market. You're up 20% from the lows. You're up 80% now, and that to us qualifies as a bull market. And while
but there are those who would say that one of the causes of the bull market has been easy monetary policy. You get quantitative easing support in there. I mean, do you believe that the fundamentals are strong enough to justify the bull market?
Yes, because you look at a case just last night. Priceline, one of the stocks that we've talked about regularly, was up 60 points. The numbers were good. And at the end of the day, fundamentals should trump emotion. Right now, I think that the emotion is all negative.
Laszlo, you are a bull. You have conviction in that view. Tell me how you analyze whether a stock is cheap right now. There are those like Robert Shiller who say, you know, that the typical way to analyze the stock is perhaps not reflecting actual value right now. How do you decide if a stock is cheap?
Well, I believe you should always look at the conventional, and there's always games you can play in mathematics that you can undertake, which makes things look skewed to one direction or the other. But when I look at something like Caterpillar trading at 12 times earnings, and even about the same on going forward, I'm comfortable with that. Others will say, well, the earnings are going to come down, but one of the bearish cases has been for the last 2 years is that earnings estimates are too high, and then every quarter they come in and it turned out they were too low. So I look at the traditional, and then we incorporate some other factors, quasi-technical, if you will, market factors, and do a lot of analysis of what's going on in the market. As I've often said, the market is my guru, and I try to find out what the market's thinking, not tell her what it should be thinking.
I keep hearing about this trend of a global rebalancing, and you hear a lot about the cash sloshing around in treasuries right now. Where do you think that money is going to flow, Laszlo? I mean, how much do you allocate outside the U.S. markets right now?
I think that's been a mistake this year. The whole idea of global investing, I think, is like fighting the last war. We have some external investments, but we like to find companies which are unique and where there's no American counterpart. So we like, for example, the European luxury stores and manufacturers, because there's really no American competition for that high end. And then we will like, for example, we've owned the BMW, for example, because that's the premier auto company.
Laszlo, thank you so much for making time for us today.